Are you a corn bull right now?
Short term. It's hard not to be with this demand. Who are you and where did John go?
Yeah. Hey, welcome to Hedge Heads, where we discuss the commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. Well, no one knows where the market's going. We're not afraid to share some ideas. I'm Ryan Tungseth. He's John Prischmann. Well, John, we're recording a couple days later than usual, and I am pretty sure it's because you were filling your live well with walleyes.
Yeah, it was funny. I was having a corn, what should I do with my corn conversation while I was catching walleyes. The conversation started out, I'm out running around doing fall stuff, getting ready, and then I had to come clean and say I'm actually, while he was on speakerphone, I'm reeling in a big walleye. And I said I had put seafoam in the boat and I was running it through the motor for the winter, so technically I was telling the truth. But at the time I was catching walleyes. Yeah, it's been very good, and that's what I've been doing.
You were winterizing the boat while pulling in walleyes.
I felt like I needed a fish too, and it worked out for everybody but the fish that I ended up cleaning, which I don't often, but as you go into fall, it's nice to have that in the freezer. I have some friends that say they ice fish, and you get awfully skinny depending on those guys for food in the winter, or leading you to where they would even be biting. Not you. You have your secret spots and you don't show me. That's a whole nother story.
I'm not willing to share some of them.
Secret crappie spots. But yeah, no, it's the calls keep coming in, and it's a lot to do with either I don't have storage and I'm selling my beans, or I'm selling my corn, or I don't have enough storage, or here's my situation, what should I do? I'm going to store this, or I'm bringing it to the elevator. This is my situation. You get a lot of calls this time of year on that. Super important time of year, and very important decisions are made this time of year. Because once you sell it, you no longer have it, but thank goodness we're around. You can still re-own it. Does it make sense? Doesn't it make sense? What are the numbers? That's exactly what we do. We go over this with guys. You shouldn't necessarily know. This is why people like us exist. So you can call and say, hey, do you have any ideas what I could do? Here's my situation. For example, one client called today. He said, I don't have beans. It was in a bad region, actually, one of the few bad regions. A couple different questions. They were a little short on one of the corn contracts. Should I buy out that contract now? The remaining, whatever I think it was, 5,000 bushels short. And then, the other one was the beans, a question on beans, whether to store it or not. And so you get a lot of these, and that is our job, to help guys navigate that. And there is no book you can write and just say, hey, memorize this and we'll do this every year. It is different every single year. It's another full-time job. And good news is we're sitting here waiting for you to ask, and that's what hopefully we can lead you to better information. But what do you want to do this time of year? Should I store it and pay X amount of dollars, or should I look at a call which will have less risk and do the same thing that storing it would do? Now, you store it for basis appreciation or tax deferment on money, and then sometimes logistics. Like you just simply can't haul it all to the elevator, get rid of it, and not store it. So there's a lot of moving parts, and every farm's different. So back to the newsletters, you can't just subscribe to something and expect it to tell you what is best for your farm, your storage situation, and that changes every year. You might have a bumper crop this year, have a different problem, on storage than if you're a little short this year, you have no problem on storage. So it's one of those deals where you can't nail it down. You just have to take it as it comes at you. And like I say, I'm out fishing. I'll answer that call and we'll talk about what the plan is. What you don't want to do is just fall into this pattern. I'm not sure what to do. I'm just going to pay storage and just throw it away and hope it goes up. That's a high percentage of people. That's they hear the cafe talk, they subscribe to newsletters, and they hope that it goes up. And that's a terrible marketing plan. You should definitely see what your options are and then decide from there what to do at the elevator, what to do here, if anything, or what you should be doing on the farm. And that's just that's what you do this time of year, is just try to logistically figure out how to cover all these bushels, what to sell when, store it. Is there going to be basis appreciation? Should I be doing basis contract? Should I be locking up basis? Even though we don't do all that stuff here, we still give advice on what you could be looking at. So that's what happens this time of year. And I would expect a lot more calls to be coming rolling in as harvest starts winding down. It was a very fast harvest. The weather's starting to shift. And I expect a lot more calls in the coming days on exactly this kind of stuff.
Well, I think it's important to note that newsletters, should you happen to find one that does have good info, that info is not necessarily, like you said, related directly to you, but it's also, in general, newsletters are targeted more towards the speculation side of the market than most of the ones I see anyway. Maybe a few, but hedging isn't speculating, and there's a significant difference there.
Yeah, there is, and then you'll get a lot of newsletters that'll say marketed 20% at this price, and it just looks awesome. And it's just I see these newsletters, but I just don't see these recommendations all the time. It doesn't always seem to match up. And then you'll have like highly speculative stuff, like re-own the last 4 years, and I won't name firms that did that on paper and stuff like that. You'll hear these things, you'll hear everything. I just am a big believer in that every farm is different, and then you need to talk about it a little bit. You don't need to talk about it for days and days and days, but 10 minutes a week, it can pay off dividends than trying to shoehorn yourself into what a wide variety of people reading that newsletter is doing and trying to make it fit for your farm. As a matter of fact, that's where Turnaround Tuesday came from, is newsletters. They used to be mailed way back when, before cars. No, just, way back when, not too long ago, really, but it seems like just yesterday. It would be in the mail. You'd get a newsletter you subscribe to, and it would show up, and you're excited, and it may become Thursday or Friday. You read it, get ready with your order for Monday on your broker. First thing Monday morning, you'd call them, I got a hot trade. And then the Chicago traders on the floor would subscribe to all these newsletters as well. So it'd be like, okay, here's what we can expect to happen. All the farmers' orders or the newsletter subscriber orders would come in. It would go that direction that day. And the next day, Tuesday, is when the floor traders would take all their money away. So that's where Turnaround Tuesday came from, or so at least it's rumored that's where it came from. And nothing's really changed in that industry. They're not bad. They get a lot of information out, but that's their job's not to tell you what to individually do on your farm with storage and what you should do. Unless you're subscribed to maybe one that's a little more expensive and more involved. Those are a different deal altogether. But I'm just saying your general circulation ones, the ones that bounce around that you probably heard of, and or they've called you, and or you are subscribed or have subscribed. It's just they've always existed. You're gonna want more details, and you're gonna want more stuff geared towards your farm, and you're gonna be a lot more successful if you do that.
Well, and the market hasn't changed either. It generally tries to hurt the most people possible.
Yeah.
Anyway.
And so what I'm gathering now is a lot of beans got sold off the combine. That's very common for any year, but I didn't hear as much as I normally would hear of that. So it sounds like guys want to hang on to it, and it is a lower price than the last few years where it was easier to let it go. And then corn, it just seems like everybody is going to sit on corn again and wait. And that's probably, honestly, why the price isn't going higher. You're seeing outstanding demand, and don't paint me with a bull brush here, but I mean, it's unusual what's happening in corn here. The numbers are not good, but this is how 2020 started. I mean, what was it? 3 billion bushel carryover projected in August. It was a very different year because of 2019 and a crop. I would call it a phantom crop that didn't exist, and there was politics involved, and we won't even go down all that. It was different in that regards, where the corn was really not here. Basis was good for 2 years in front of that bull. But I'm saying on the demand side of stuff, you're seeing these flash sales every day. That's weird. And then it would just continue and continue and continue, and that's what's happening in corn. So I talked to one client for quite a bit about this. And what it is it's unusual. Like, you don't normally see what we're seeing in corn. So then why is it unusual? why are South Korea, why is Mexico buying, and all these countries, besides really China. China hasn't been on corn. Why are they buying? What makes this year different than other years? And, then you start speculating, what could it be? Is it the politics? Is it worries about tariffs and Trump? I doubt it. China's not really buying, and I don't know that Mexico had issues. I think with NAFTA, there was a little tiff there. But why are all these countries buying it? I would say because we're probably the cheapest in the world. I mean, I think it's really logical. It got to a price where the world wanted it. Not only that, we have carry in the market, 13, 14 cents between December and March. It's saying, hey, here's where the most abundant supply is. Here's where the cheapest supply is. And if you wait, it's going to cost you 14, 15 more cents. So it's on sale in front. And that's what a carry market is designed to do. Say if you wait, you're going to pay more. So it tries to get that demand up front. And so far, it's working very good for corn. What's also unusual is not a lot of people are talking about it. Twitter chimes up about it a lot, but it's kind of drowned out because they're always talking about it. Ahead of the, we're way ahead of where we need to be projection-wise. Kind of leaving out the part where exports trail off, later in the year and it all averages out. This is unusual for corn. You don't normally see this much demand. And when you look at the 5-year average as percent of what the USDA forecast where we should be, we're now well past that. This all happened in the last 3 weeks. So it went from not unusual to very unusual. So that's where I'm at on corn. Something different's happening. And if you want more information, what I'm doing personally and recommending, give me a call. But it's definitely something to be on your radar screen because you don't normally see it. Where beans is great demand as well, but you do normally see that this time of year. It's totally normal that you would see this very front-loaded market. What I like about corn is we're still going to be the only corn for sale all the way. There's Ukraine and there's South America. Clearly, we're at a better price, and that's why we're selling all of it. And we're going to have this, and we normally do, all the way through May, until the second corn crop's ready in South America. So it looks good. At least the runway's laid there for corn to take off. The problem's going to be, in my opinion, is everyone has the same plan. Sit on it and wait for a better price. And the market doesn't like to reward that kind of stuff when people cluster up like that. But demand is the one thing that overrides that. Just the blind stumble and luck that this goes up. Demand can do that. It's the one thing that'll trump bad numbers too. And that's how you get from low numbers to better numbers is demand. So that's very nice and refreshing to see. We haven't seen this in years where we could say, hey, the USDA might change their numbers. At first, it looked like they had the bar set unusually high. Like that's a lot of good news built in the market, and we're already outpacing that. So very positive, but you're not seeing a lot of people talk about it. I think everybody's busy, and everybody's got burned trying to get bullish corn for the last few years for who knows what reason. But actually, the numbers are different. So that's where I'm at. The numbers look different right now, but it's unfortunately a really short window, and you can't make too many conclusions from it. But it's still very positive to see this corn happening early, and you just don't see that very often.
You were sounding really bullish there, and then you kind of end with everyone has the same idea.
Yeah, no, I don't want to.
Are you raining on your bull parade?
No, I'm a numbers guy. Like you can't ignore the numbers, and I feel like people really have ignored the numbers for some unusual reason the last couple of years, and hung on to grains when the numbers were really bad. And then you don't see them talking about it suddenly, and all of a sudden the numbers are something to talk about. Again, Twitter's talking about it plenty, but it gets drowned out in the noise. They're just permanently bullish. And then the Facebook group, it's just ultra permanently bullish, so you would never know if a bull was being born because it's permanently bullish there.
Sure.
And if you were to follow them, you'd think the average yield would be 60 bushels every year in corn. So that it's interesting, and that's where I'll leave it. I'm probably going to be actually recommending certain things. We do have a kind of a weak window here over the next couple weeks in November, just on the seasonal charts for December corn. But also unusual is we haven't moved up in price on this good demand. Like the market doesn't believe it. Like it thinks it's going to revert back to where we were, the poor demand we've seen, or just average demand over the last couple of years. So just something to note. That's where I'm at on corn.
I haven't had many calls on corn. I have had a lot on soybean calls, which I find interesting. I mean, that is the time of year that we get more calls about soybean calls, but
and normally I would hear more on corn, and just the optimism would be higher on corn, and you're not. I just think it's guys busy, so I'll get a better read on it. Or maybe they're just beat down by markets that have been downtrending for 3 years now, and maybe you've given up and they can get capitulation at the bottom. You still don't see that selling and that fear at the low price. That definitely hasn't happened. Guys plan on storing all this corn again to glory. But they do at least have the wind on their back right now. As long as demand stays like this, there's no reason for corn to go down unless the funds sell it, which they certainly can, and drive it to much too low price. But we're past that harvest pressure, or the most of the harvest pressure. We're past the big hurdles that we need to get past. Next one's going to be the November report. Of course, they could add more yield. And that's kind of what the December-March spread's saying is there's a lot of corn out there. They're still widening out that carry. So, again, this is just on the radar screen, no recommendations. But when's the last time you heard me talk positively about corn?
Right. Well, and when you were much more negative corn, it was because the commercial channels were full. And that's what the spreads were saying.
And the numbers were saying that. And the corn was falling.
And the corn was falling. And price was going down. And the numbers were saying that. Spreads were saying that. And what changed is the demand cleared out those commercial.
And that's what you need.
Clearing.
That's how you sustain a market into an uptrend is to clear those channels out, have the corn in storage. Then they have to bid it out of your hands. That's what we saw a few years ago. The ethanol plant or everybody's just on the phone begging for your corn at much better prices than what you even see on the board. You want to get there. We're not there, but you need to clear out the glut first before you can even attempt that. And we're clearing the glut. We don't know what the USA report's going to say. They had a couple more bullish or a couple more bushels to this. Then, of course, it's going to be more work. But nonetheless, very positive to see. I'm the first, me, ray of sunshine, first to point out the positive.
Always on the positive side.
Always. That's what I'm accused of all the time. I guess it's the fault.
We are the hedge heads for a reason, and we've talked about this before. I mean, when your focus is on hedging, you're looking for why the prices could go down, because that's the point of hedging, is to lock in your price.
Yes.
Which is why we tend to lean towards the negative side, is that's kind of what we're searching out, is what could cause us to fall.
And history's on your side. I mean, there's more money on the downside than there's upside in grains. And seasonal's on your side. Like it is odd to me that people don't embrace that. It seems like they embrace it needs to go up to make money, and you really need to break out of that. That is not at all what grain marketing should be. Do you have to get above break-even price to make money? Yes. Logically, mathematically, and everything above, yes. But you still, I find that most people make more money in the markets farming when the markets go up. And I know it sounds really logical and real basic, but you'd be surprised. Like, it falls most of the time. You're long all the time. You should be protecting that and protecting those profits. And a lot of people don't. And you'd think that would be really logical, but it isn't. And that's why, hedging, the point is to protect the bottom line, protect the downside. I have a great corn spread on now. I might adjust where I have the downside protected, acts like a futures on the downside, but the upside won't act like a futures, meaning we want it to go higher to appreciate, but if it goes down from here, we're protected. So again, back to that black and white marketing. Guys like the shortcut. I'll get corn, questions on corn. Should I hedge by December 25? No is my answer. I have a very good plan for that, where we can have a very high floor, no margin calls, and then you have your upside wide open. I don't understand why people wouldn't choose that. It doesn't make any sense to me why, before you know what the South American weather is, before you know what the U.S. weather is next year, you're willing to lock that price in. It makes no sense. But the reason you do is because in their mind it's free. I had nothing out of my pocket. But you want to get away from that thinking. Not every market's like that. There's going to be volatile markets where it's extremely hard to cover it on paper, and you're much better off locking that price in. for instance, let's say we're 650 corn and it was a bull market right now, and next year's corn was 50 cents under, but it was still $6, then it would make a lot of sense to do that. But when it's down here at the bottom and you only have 24 cents, the other day it was 24 cents between December, and people are talking to me at this time of year about locking 25 corn in, it just shows me they're just unfamiliar where the spread should be, what contract to pick, what time of year they should do it. They're just guessing, and out of fear probably, and just lack of knowledge.
Well, and we see that more, and it's this is tradition. I mean, it doesn't matter the market, if it's corn or the stock market or anything else. When it's at the bottom, people seem more likely to sell, right? And when things are at the top, everyone is calling to buy.
Yep.
It's just psychology 101 in trading.
What I try to do here is keep the upside open, try to keep margins down or non-existent, meaning you might have a front fee, like let's say you buy a put, you'd have a front fee, but you wouldn't be open to margins. Other guys will be open to margins, but you're looking for that combination of things that give you that floor upside at times of year when that can happen. And the whole point, and we've talked about this before, of hedging is we don't know where the markets are going to go for sure at this time of year because of all the unknowns with the weather and the world events. Thus, it's in your best interest to protect the downside in a bear market, which we're in, but leave the upside open if it looks like it could go up. So that's what we try to do there, and I don't understand why more people don't do that. I think it's just lack of getting good information more than anything, and it costs money out of pocket. I think that's the big one. And again, back to find the right banker, find a marketing loan, make a plan, and you will do a lot better. Like, again, the strategy we're in, we want corn to appreciate, but if it doesn't, we're going to make money on the downside. So without a ton of risk to the upside. And then we also have a plan. If it does go to the upside, what's our plan there? And we have that plan laid out as well. So that's just kind of the long story short is you need to start getting away from that black and white marketing, because look at this demand in corn out of the blue. Everybody in the world's buying. And no one could have predicted it, and it can change the market if it continues. But on the other hand, back to the regular, John, what happens if the demand just goes back to regular, and this was just 3 weeks of spectacular demand, and corn struggles? Well, that's what the hedge is for. So you try to get the best of both worlds. What I find, here's the combination of stuff I find guys want. No risk, no cost, bottom protected from here, upside wide open, and free. That's
maybe you can buy them dinner too.
Yeah, and dinner and a free lunch. And as it goes up, make sure that price gets locked in too, so there's like a elevating floor for free. That just doesn't exist. It's never gonna exist. You're gonna have to give up something to get the other. Like in this particular one, I'm taking an additional risk on maybe another short call. Additional short call to pay for that put. Again, you don't want to get overhedged in this kind of stuff. These are all planned out with guys that know what they're doing, and they don't overhedge. So we always have worst case scenario and all that stuff planned out. But even if you have a strategy that has risk to the upside, you can buy. Let's say you just short. Let's say it was 450 corn, and you think it's not going to go up anymore. You can short a futures at the same time. Tell your banker, hey, I'm going to buy a 10-cent call to get through the South American weather window, and that's my insurance to the upside. And you could give them a hard number. My hedge should not cost me more than this. So it gets, but that's, again, you shouldn't know all this. You should find a guy that does, though. And then as you find that guy, you will want to learn, and then eventually, between you and him, work out deals. That's how you want to evolve as a hedger.
Yeah. Well, talk about the elevator side on that then, because that is where a lot of business gets done, is the elevator side.
Yeah, because it's prepackaged like a mortgage. All the fees are in, nothing out of pocket. It's just convenience, and that's what they know. So it's a path of least resistance. Now, they serve the purpose of buying your physical grains and then reselling it for profit. That's what they're there for. And it's not that that's the whole point of everything. But it doesn't mean you should be doing everything there. And I think people are realizing that. You want to know when to do that to your advantages at the elevator and their programs. When it's to your advantage to do it here. When it's to your advantage to do it on farm storage, or a combination of all three. that's what you want to strive to learn, is how to use the tools to your advantage, not just go with, this is the way I've always done it, or this is the way my dad did it. It's, I don't like the monkey business, and this is just the easiest. Because you work very hard, and then all your hard work is not protected at all at the very end, just because you're exhausted, you're hauling it in, and this is where I do everything. But you just shouldn't be like that, because a lot of guys aren't, and they have more choices, I should say. They don't always do better, but they have more choices at least.
It does kind of amaze me, and I've heard that a number of times too. It's the easiest.
Yeah.
In general, these are the hardest working guys,
Yeah.
out there, but then you're going to take the easiest route when it comes to your profit.
Yeah, there'll be guys that pay 5 cents of storage, and you could own for the same time period a call option for 3 cents or even 2.5 cents, oftentimes in the same exact windows, and you get cash in hand by selling your physical grain. You buy call, you only have the risk of the premium that you paid. You have your upside wide open like you would if you stored it in the elevator, so it's a lot better and it's cheaper, and they still choose the route that's much more expensive with much more risk because they just don't know any better.
Well, there is a factor of it is cash out, which, it's cash out today, especially.
And there's basis to consider too, and there's tax implications to consider. I don't think that's going to be an issue for a lot of people this year, but in certain years you have tax deferment. You'd want to not sell it this year, and you'd want your income in the next year. But short of those reasons, there is no reason to do it. You're simply wasting money, and you're not learning how to improve yourself. Some guys just don't have any interest in it. They like to farm. They're good at farming, and they just do what works for them, and that's fine. If it works for you, that's good. Just know it's horribly inefficient, and you could be doing it better by at least checking on the numbers, not necessarily doing the same thing by buying a call here every year, because it doesn't work like that.
Right.
1 year it's going to be twice as expensive to do it here than store it, and then it has a lot of, let's just say a year, it was kind of a shorter crop, like 2019, and it has a lot of potential to go up a lot. And obviously the futures market knows that. They're not going to price calls really cheap. So it might cost 8 cents a month for the call. So storing it, and you might get basis appreciation. You just need to recognize the years where that benefits you and where it doesn't. And that's where I feel like very few people do.
Yeah.
But the guys that do, it's interesting to hear how how well they can do in these markets when they do know what tools to use when. And I think that's just a big weak spot. Just path of least resistance. This is where my grain's going anyway. I'll just figure it all out here. It's just easy.
Yep.
But again, oftentimes it's not the best. But you can't write a book and say do this every year and then hand it out and teach it in a college class.
Right.
Because it changes. Not only that, it could change abruptly next week. What looks like the best idea this week might be a horrible idea next week. You have to be very humble in these markets and realize it can change really quick.
And it's like you talked about, it's each individual farm is different too. It's not just the market changing and the basis changing, and each farm is different in what they have too, or what their goals are, or where they.
Yeah, I'll have one guy that'll be short hundreds of futures contract on the farm, knowing full well there could be a $250,000 margin call anytime. The next guy will want to just be options only and just have. I don't want the risk, but I want to see if we can figure it out in options. The next guy might be a combination of both. The next guy might not know anything he wants to learn. The other guy might be a weathered veteran where he's doing 10 things at the elevator, 5 things with me, and then all kinds of on-farm storage stuff using the carry in the market. That's a really advanced guy where he's doing stuff. Like I'll talk to one of my clients out of North Dakota, Minot, and he's a real bright wheat guy, and he's able to generate a very good price on his wheat every year through what he does on his farm here and and the elevator. And he explains it to me, and honestly, I get lost. It's like he's on a different level, and he could teach guys. So don't give up, I guess is a lesson here, and just keep learning. You won't get it all overnight, and we won't have all the answers. We never do. We hopefully can get some good ideas in front of you, though. That's what we want to do.
Absolutely. Speaking of wheat, you You've been talking about some wheat spreads this week.
Hot trade idea alert. Yeah, actually, we can't give any recommendations, nor do we. But call me and we'll go over it. I do like that there's 3 different wheat classes, and the CME is adding some more wheat classes, some milling wheat, some European milling wheat classes. So there's going to be even more spreads to deal with. So you have 3 different protein premiums. You have Minneapolis is the highest premium, protein premium. Then you have Kansas, and then second highest protein premium, and then Chicago, deliverable, I'm talking premium. So they're always fun spreads to be in. I had a client, as the market slowed down, say, hey, let's look at some different stuff. And I do love wheat spreads. So if you like spreads and wheat spreads, call me. There's some stuff that's got on my radar screen, and I am tracking. And seasonally, there's some stuff, and there's some weather stuff going on in the U.S. So that's very vague, and I realize it because we have to be vague. But call me, and I'll be more than happy to tell you exactly what I'm doing. I do like wheat spreads. But just outright wheat, that's a trickier deal.
So it's what is that? Trade wheat, sleep in the street. Trade wheat spreads, have a really big bed. I'm trying to think of
sell wheat, live in a mansion. That's a Twitter classic. That's not mine. That's not original by me.
Sell wheat, live in a mansion.
Yeah, you could probably make up anything you want about wheat, and it's probably true, except for wheat is easy to trade and you'll make lots of money. That's the only saying that's not true. There's got to be some good discount ones at the elevator sayings, because that's a favorite of wheat buyers. But no, wheat can be an exciting market. I like to look at it, and I think a guy's got to diversify. You want some speculation ideas or just general ideas? I'm going to start diversifying into different markets. Another market that I want to look at is going to be shorter term rates. I think there's going to be a lot of politics, and I think things are going to change. Outlooks are going to change. So short-term interest rates I used to love, and then all of a sudden we went to 0% for a decade, and all that stuff died. It's back. It's back, baby. Back. Interest rates are moving around. It's very smart for you to get familiar with it on the farm as well. I'll be getting into those markets, and they're very, very interesting, always moving, but here's the great thing about them. They tend to trend really well, and I never call a market easy, but they're a little more forgiving. It's the general perception and trying to get in tune with that, where interest rates may move. It's not where they are today. Everybody knows that. It's priced in. It's where they're going to move. And so it's not as complicated as you think it is. Obviously, you're keeping your eye on the economy and the old Fed. But politics are going to be crazy. I don't recommend it for the next week and a half, nor grains or anything. And then what if A gets elected? What's going to happen? No one even knows. How about B? No one knows. So we're going to find out here, and it's going to be kind of probably a volatile week and a half.
I was just going to say, if you want to trade something, it might be volatility. But that's probably priced in already too.
Yeah, don't you remember in 2016, as like out of the blue, I think it was 8:30. I remember this perfect. The news, of course, was saying if Trump wins, the stock market's going to go to zero. And then all of a sudden, with the first point where it looked in the night that he was going to win, the stock market did plunge, and a lot. I think, was it down 1,500 points in the Dow? A lot. Yeah. And then by morning, or not even by morning, a couple hours later, that thing was ripping higher. Like, hey, maybe a business-man
it was
might be okay.
Like
we'll see what happens. So, yeah, expect anything and everything on election night. For 2020, what was notable for me and notable for a couple of my clients, when it was clear that Biden was going to win like 5 days later, which is, again, a whole nother story. They bought some diesel contracts or crude oil. And boy, was that ever a good trade for those guys. They just figured, hey, more regulations, less pumping. Even though that wasn't the case necessarily, that the perception of that caused crude oil to go into an uptrend, and they did very well in those contracts. But I don't think it's going to be easy to navigate, and I don't think it's going to be real predictable. I'm going to watch, and hopefully something comes out of it that is predictable, and it should be very interesting, though.
Well, the next time we record is going to be on Election Day, so we still won't have an answer while we record. That will.
Yeah, I'm ready for it.
I'm ready for. Well, I hope on Wednesday that we know.
I
hope Tuesday night we know something.
I think everybody's had enough TikTok hot takes, I think.
Oh, my gosh.
But I'll probably see at least 10 more. Even if I don't try today, somehow they're going to get in front of me. And like I say, both sides will have some crazy thing that they got to show you. I'll be texted, peppered throughout the night with like game-changing information, I'm sure.
Yeah.
And at least 10 of them a day. But pretty soon that ends. I look forward to that.
Well, I know we both definitely have our political preferences and our where we would like to see things go, and we're definitely set in our ways that way. But as far as trading and hedging goes, and the hedge, just tell us who's president, and let's move on and start figuring out what we're doing for the market. I mean,
I'm guilty of it in the stock market. I don't think it's politics more than I just don't think the economy is as good as they say it is. And then with inflation, I would have thought the stock market would go down. But truthfully, just every dip, just buy has been the answer, and I just can't make myself do it. And it just doesn't get any easier than that, does it? But I will tell you the day that I will do it, and then you can get short, because that I will end it for everybody.
I'm not going to talk my book, but you might have just given a clue away there if you're smart.
It's that stock market's something else. But that it's a very popular thing too. People do like to call. People do trade the indexes all the time. So it's not that some of this mysterious thing that the stockbroker does. We definitely do that here. Very common.
Trading the indexes, not individual stocks.
Yep. And a lot of guys have been asking about options on it. Yes, they exist. But I still go back to that micro size stuff. Love the micro size stuff. Gets guys involved. You can have exposure without all the risk that you would have with the larger contracts.
And I'll say I do trade options on the indexes. The problem with them is they're usually extremely short term, like the next day. Maybe you want to talk about, because we do all the time, the short-term versus long-term options.
Yeah, I mean, we can do that next episode where, the differences in that and philosophies and outcomes, because, boy, do I ever see that here. I mean, I see guys choose the month that they choose, and it makes a huge impact on whether you make money or not, or how fast you make money or not. And understanding those little things with options, which seems like it should be really basic, but it's not. You choose your right time frame, you're laughing. You choose the wrong time frame by 2 days, and you lose it all. Like, it makes a huge difference in options. And generally, I like to buy a lot of time. You don't. You're the opposite, which that's what makes a market, Yeah. But, boy, the short-term guys, when they do get it, it pays a lot better.
Yep. It becomes a balance, because short term is cheaper and can be higher reward, but you're wrong way more often.
Yeah, you got a tiny window to be right in, and of course that's going to be harder. Why I like commodities and long-term puts is that commodity markets tend to fall. And somewhere in that bull, the wheels are going to come off. Even if it is bullish, that's the beauty of it. And wildly bullish, it's just human nature to take profits, and just the natural market rhythms is down. And when it just falls a lot easier than it goes up. So I'm a put guy. I love puts. But when those calls work, that's where you hear those stories like, rags to riches. Like when the calls work, they work really well. And then another 90% of the time it's, some profits, not enough to take, and you usually don't get out when you have some. And it's just not moving fast enough. Now, there's other markets that can, like soybeans.
Yep.
And you have your very volatile markets that can cover a lot of ground to the upside. Corn is not one of them. There's been plenty of times where corn calls have made money, but it's a market where it's really hard. It's just not a volatile enough market for the prices that you have to pay. I'm not saying never buy corn calls. I'm just saying you got to know the personalities of your markets. But we're already doing it. This could be a whole nother podcast, and it probably should be, because I love options. I think that a lot of people go to marketing meetings, and I think that a lot of people go to college, and they tell you 90% of options expire worthless, which is technically true. But you can go buy a $9 call right now in corn if you want. Do you think that's going to expire in the money?
Right.
And then
it doesn't mean you can't make money on that $9 corn call, though. I mean, you could
880, 860. There's a million strike prices. Of course, most of them are going to expire worthless. So it's a very misleading statement.
Yeah.
But the truth is, the hard part of options, in my opinion, is knowing where to get out, and that has everything to do with human greed.
I can speak to that today myself. So
I just completely ruined my summer because I don't know how to trade options. You can have the best ideas, watch people just absolutely make a pile on your ideas, and somehow screw it up for yourself. And I'm very good at that.
Well, I've been complaining all morning. I got out early today out of a call for 20 cents, and it was 64 cents as we're recording this. So, ouch.
I often say this to my fishing partner, in a tournament. He has the big one on, and it's almost in, and then it gets off, and then I always ask him how much that one weighed and what do you think we're going to do good with that one? And that's the same with trading. Like if you're out, you're out. I mean, it's not. And then you can have a beer at the award ceremony afterwards and talk about the huge one that got off, and absolutely nobody cares.
No one cares.
No one cares at all. But it never stops people from doing that.
The way it works in trading, that's right. The way it works in trading too, though, is if you hang on to that, it goes immediately to zero.
Yes, yes. And somehow you probably lose more money than you thought you could, even in an option. Somehow it does that. If you take it and take your small profit, it will run like you've never seen it run, as easy as it's ever ran in that direction every day. Just to spite you, and that's the way options work.
That's the way the whole market works. So
pretty much. That's the way life works.
That's the way life works. Yes. Yeah. Just be happy you got a small profit. That's what we're here for.
Yeah, so I've gotten over that a long time ago. I don't care. I mean, this one in the summer is lingering a little bit, and I whine about it. But I know I don't care. There's another train coming down the tracks, and that's what's great about trading.
I'm going to throw just one trading psychology thing in that's important to me. Maybe other people will agree, but I lost a whole lot of money a few years back when I thought every win had to be a big win. Once I realized that a win is a win, like it doesn't matter the size, it definitely made a difference in my account.
Yeah, if you're moving forward, you're beating 95% of the people out there. So that's all anybody's looking for.
Yeah. Excellent. Anything else to add today, John?
Well, we're probably gonna have a lot to talk about next week, so no. We'll, you want that hot weed idea? Give me a call, and or you have your what should I store, what should I not store, what should I do, or you want to talk about my change of heart in corn short term, which I'm getting some negative feedback from my bears. I think I've made people too bearish. No, I'm a numbers guy, so if you want to go over it, 218-731-1578.
Thanks, John.
Yep. No, I'm a numbers guy. I've said it. No, I'm a numbers guy. I've said it.